Buying gold bars. Investment strategies. Part 1. Dear YouTube viewers, welcome to the Tomahawk Investor channel. It is time for that regular weekly episode of ours, and you have come to the right place. Because in the next 15 to 20 minutes, you and your next-door neighbor subscriber have every given right to learn and consume regular, educational dose of investing mastery. The earth does not belong to men. Men belong to the earth. Chief Seattle. Usually, the product investment gold should be one of the last lessons a new aspiring investor should be learning. However, I wanted to start your journey on this channel by giving you a taste of the final destination you should be headed for. When you reach your first capital accumulating milestone, that is usually around the amount of $500,000. So picture yourself collecting all those shiny gold bars and gold coins. That should be an image you should always have in your head, a destination where you should program your Tomahawk brain, and a motivation that will drive you towards your ultimate road to success. This $500,000 milestone, when reached, should be a road stop sign, where you should lower your risk appetite and should continue investing in a lower gear. That means you should lower your annual yield targets for the sake of safeguarding your capital and taking care of your personal well-being by using every opportunity to use more of your free time for yourself and for leisure time spent with your family and friends. Gold is a product that will mostly satisfy this natural need for safe and stress-free investment lifestyle. Gold plays a crucial role in this transition, offering stability and peace of mind. In a moment, we'll delve into 10 reasons why gold is the best investment asset for any investor's portfolio. So the crucial advantage of shifting gears from trading to investing is the amount of reduced stress. For those of you who already have achieved certain success, it's time to focus less on risky trades and instead prioritize secure long-term investments. So let's talk about how to make your money work for you. You see, there are two main ways people approach growing their wealth: trading and investing. Trading is like sprinting. It's all about quick moves and short-term gains. On the other hand, investing is more like a marathon, aiming for steady long-term growth. Trading often involves daily action and higher risks. Sure, you might make big gains fast, but you could also lose everything if things go south. So, whether you're into the thrill of trading or prefer the steady path of investing, understanding these differences is key to reaching your financial goals. And hey, who doesn't want a golden future? While traders aim for short-term gains through rapid transactions, investors prioritize long-term growth and stability. By understanding these differences, you can tailor your strategy to suit your financial goals effectively. Investing capital aims for long-term growth and stability, while trading capital focuses on short-term gains through active buying and selling within a shorter time frames. So, if you are planning to create wealth by increasing your small $5,000 account and turn it into larger $100,000 or $200,000 account, or even higher balance of, let's say, $500,000 and larger, then you should focus more on learning trading strategies, where you should engage yourself into daily trading and frequently risk your capital by searching profitable outcomes in short time frames. This often requires using larger portions of leverage that modern brokerage companies and platforms offer to traders that enables them to open larger positions with relatively small account sizes, although with higher risk to lose your entire account balance, if not properly risk managed. But let's get back to our current topic about gold and focus more on less risky and fancy investments that build portfolios slowly and steadily by seeking for stable capital asset gains, regular dividend annual yields, and investment coupons. Investment gold is an asset that also brings stability to your portfolio, since gold is considered a valuable asset that can serve as a hedge against economic uncertainty, especially in times of political instability and market volatility. Various currencies were popular during last 500-600 years, in different periods through history. Let's take a fascinating journey through history to understand the enduring value of gold. Back in the 1500s, Portuguese currency ruled during the age of exploration, led by figures like Magellan and Vasco da Gama. Then in the 1600s, Spanish silver coins took center stage. By the 1700s, Dutch currency dominated, followed by French Napoleon coins in the 1800s. Moving into the Victorian era of the 1900s, British sterling reigned supreme. Today, the US dollar holds the crown as the world's leading currency. The importance of all those historical currencies vanished throughout the centuries. But amidst these changes, one asset has stood the test of time: gold. From ancient civilizations like the Egyptians and Mesopotamians to the glory days of Greece and Rome, gold has always held a special place. Its shimmering allure adorned jewelry, ornaments, and ceremonial artifacts, symbolizing wealth, power, and prestige. In today's capitalist world, gold remains a cornerstone of wealth and investment. So why does gold continue to hold such value in modern times? Here are top 10 reasons why is gold the ultimate investment asset class. 1. Diversification. Gold offers a unique way to spread risk in your investment portfolio. Unlike stocks and bonds, gold often moves independently. So when one part of your portfolio takes a hit, gold can help balance things out. It's like having a safety net during market downturns. Gold can serve as a valuable buffer within your portfolio that usually offsets losses incurred in other asset classes. 2. Protect against inflation. When prices rise, gold tends to hold its value, making it a reliable hedge against inflation. It's like having a shield to protect your purchasing power during times of rising costs. 3. Safe haven asset. During times of geopolitical and economic uncertainty, investors often flock to gold as a safe haven asset seeking stability and a store of value in turbulent times. In times of economic or financial crises, gold has historically proven to be resilient, maintaining its value or even increasing in price. When other asset classes experience significant downturns, gold has historically maintained its store of value role over the long term, making it a reliable store of value and a means of preserving wealth. 4. Liquidity. Gold is a highly liquid asset, meaning it can be easily bought or sold in various forms, such as bullion, bars and coins, and jewelry, making it accessible to investors looking to convert their investments into cash quickly. 5. Industrial demand. Beyond its investment appeal, gold is also in high demand for industrial uses, from electronics to medical devices and aerospace technology. Gold plays a vital role in various industries, boosting its overall value. 6. Ownership you can feel. With physical gold, you're not just investing in numbers on a screen. You actually own something you can hold in your hand. This gives investors a real sense of security and control over their investments. 7. Global demand. Gold has universal value and is in demand across the world, making it a globally recognized asset that can be easily traded internationally. Many central banks around the world hold significant reserves of gold, indicating its enduring value and importance as a trusted reserve asset among governments and financial institutions. 8. Limited supply. Gold is a finite resource, and its scarcity contributes to its value. Unlike paper currency, it cannot be artificially manipulated or created and printed, infinitely making it a desirable asset for those seeking long-term stability. The amount of physical gold that is present in the world, in the form of gold, reserves is limited. For example, as of 2022, the United States holds the largest gold reserve of any country, with 8-year 133.5 metric tons of gold, equivalent to 523 billion USD. Germany was second with 366.5 metric tons, equivalent to $217 billion USD, followed by Italy with 2452 metric tons, equivalent to $157 billion USD, and France with 2,436 metric tons, equivalent to $156 billion USD. China and Russia are also major holders of gold reserves, with 1,948 and 2,299 metric tons, equivalent to $125 and $148 billion USD respectively. 9. Intrinsic value. Unlike fiat currencies, which derive their value from government decree, gold possesses intrinsic value due to its scarcity, durability, and universal acceptance, making it a timeless investment choice. 10. Constant trend of price, rising. While subject to short-term price fluctuations that rarely occur through history, gold follows the rising up trend almost all the time. For example, 50 years ago in the early 70s, the price of the gold was at 35 USD per troy ounce. Yet in 2024, price of gold is currently moving around 2,200 USD per troy ounce. Speaking in terms of cash, this increase in core asset price lifted your initial 10,000 USD investment in gold in the year 1970 to the level of approximately 572,000 US dollars today in 2024. That is 20% increase for 54 years, and that is remarkable. But how gold is traded around the globe in this modern digital era? Overall, gold trading occurs 24 hours a day, primarily in major financial centers across different time zones, and it involves a diverse range of participants, including investors, traders, central banks, and jewelry manufacturers. What are 4 major types of gold products that are traded globally on a daily basis? 1. Gold futures and options are primary form of gold products that traders and investors often use to speculate on the future price of gold. These contracts allow participants to buy or sell gold at a predetermined price on a specified date in the future. 2. Secondly, there are gold ETFs through the trading platforms. Investors can trade shares of gold exchange-traded funds, ETFs, that are listed on various exchanges. Gold ETFs are investment funds that are tracking the price of gold and provide exposure to the precious metals industry without requiring the physical ownership of gold. 3. Owning a current gold transaction account is a way to have an account denominated in gold through which you can engage yourself in gold price speculating. This form of investing is especially interesting to those investors that are having doubts about where to hold and store physical gold. In case you are afraid that keeping physical gold at home or at the custody bank vault or safety deposit box is not secure, and that it is possible for it to be stolen from you, then opening a gold savings account through which you will trade the gold is the best choice for your investment. 4. Personally, I prefer investing into physical gold products, for those are the most reliable and safe way to trade gold. It is most important that you have your gold available, close to you at first hand, without waiting for several days or weeks for it to be delivered to you. In case of a major political and war conflict where the access to the bank vaults or ATMs will be restricted in terms of physical availability or in terms of the amounts you can withdraw, having your physical gold available at first hand and in your own private safe is the best option in terms of crisis. I'm afraid that in these turbulent times of global political tensions and conflicts, gold bars and coins are the easiest and safest way for you to hold your capital. In case you have to leave your home country, which is in imminent danger of war conflict or some natural disaster, for example, it is safest to have your gold bars and coins at hand and that you can convert those easily into cash when you arrive in your safe destination. This will not be available if you hold your gold on your account or in shape of futures contracts or ETFs investment funds because in times of crisis, banks and stock exchanges are usually closed or with limited functioning. What kind of gold products are most popular among investors? This is a topic for the second part of this video, which will be aired shortly. So don't forget to subscribe and hit that notification bell in order to be duly informed when new material is produced. Thank you very much for your attention. Take care and stay tuned for part 2 if you want to learn concrete gold bars and coins you can purchase. Your Tomahawk Investor Mentor, Chief Trading Bull.